What has been shaping up to be a really boring market really came to life this afternoon. We both had the Tesla Investor Day today, which was a banger. We finally got the announcement of that Mexican plant going to be coming out. We heard about how price of production for these vehicles could drop by 30 to 50% and how production speed should also pick up rapidly as well over the next 7 years with a load of other products that are going to be coming out. Tesla showed off some of its robotics as well. Very, very cool stuff for investors. There's lots of highlights already all about this, so I don't want to spend a bunch of time on it. But what I do want to cover, and what I don't think is getting enough coverage, is this huge melt-off that we're seeing in the SPY futures right now. SPY futures look like Logan Paul after his fight. Now, if you've been following the Discord, I've been putting out some warning signals about this. If you've been following Marlo's callouts in the Discord, you were definitely aware of this. And actually, he's really short. He's probably the most optimally positioned right now, a lot more so than I. I have lots of pair trades. I'm going to catch this on the downside, and I think my upside plays are going to be doing all right. Kind of like how I was shorting Chinese stocks, and those actually had a huge blowout, but because of our long energy position that actually benefited from the Chinese news, it washed out all those losses. We came out on the other side. Great. I'm expecting something similar to happen with this, where I'm probably going to get battered and bruised on my Tesla longs, for example, but my Netflix shorts and my SPY shorts should play out really well, and I'm probably going to get the balance and come out green on the other side for that. But if you were in the Discord, I think it's important that we recognize how much money retail is really pouring into this market and how much participation isn't going on with big players. And I've been talking about this a lot, but I think when we actually put a numerical value to it, as in 1.5 billion each day from retail investors, then you start to realize how significant this is and what a massive driving force it's been for the market. And also remember that there are also lots of passive mechanics that play into the market, such as 401ks that just have this incremental buying. So a passive market will melt up. Markets do generally melt up, but when you have retail also feeling them like this, it starts to give all these false signals. And that's exactly what we were seeing today. If we looked at what was going on with the VIX, like I said in that report that I put out in the Discord, I think multiple times today, I said I want to get short. I want to be positioned more short than I am. But when I look at where the VIX is, I'm trying to get my cam to move in OBS, and it is absolutely fighting with me. If we look at where VIX is, this is still a relatively healthy level for VIX. You know, we're not breaking over 23 like we did when we actually got this larger sell-off on the SPY. All right, when we hit these lows and fear was really high here, that was when we actually hit 23 on the volatility, and instead we're still sitting at 20. It's actually pretty incredible how strong this market has been despite all these major factors that we're seeing. And on top of that, we can also see that corporate insiders aren't even buying right now. Even the people inside the companies are looking at the guidance that they've been giving, and they are not buying their own stocks, which is a huge signal. Remember, you don't really care if insiders are selling. It could be a signal, but more than likely they want to buy a boat, reinvest in the company, something that doesn't actually have any real value to give you insight to where the company's heading. But buying does, because buying only means one thing: high confidence. And there's in the broader market. Now, we've seen some sectors perform well when it comes to biotech or semiconductors. Maybe if you're in manufacturing looking at steel, you're also doing well there. Energy has decided to pick up. But where the real action is interest rates. And if we actually look at the inversion in the bond market when it comes to the 10 and 2 year rates, we can see that this has huge signals for a recession. We're talking about an inversion that we haven't seen in 40 years. And so while there's still this large cohort of people saying that, oh, the recession's already past us, or it's not going to happen at all, the Fed's going to safely land the market, I think we're going to see a lot of that narrative start to unravel as people start to say, okay, the Fed's probably going to hit 6% interest rates into a slowing economy, and then we have a massive inversion that is signaling a recession. Guidance has been awful, and I think a lot of this is going to come to fruition later in the year, and we're seeing all the signals now. When it comes to actual short-term performance in the market, though, we do need to keep an eye on VIX. If we don't see VIX actually make a strong break through 23, I think a continued sell-off is not likely. However, if we do get that major break, look for a really quick visit down to 388 even before we get our next level of support here. I think a quick visit to 390 for some puts is a great exit. We're instant puts right now. I'll probably be looking for that target if we open around 392 tomorrow. That's a very clean breakthrough. That 394. We'll be looking for the to get in there. I was already in a short position. We saw this initial breakout here when the market rallied up. I went ahead and started to get short as well. So I'm loaded up in that position. Should open up nicely tomorrow. A few other plays that I want to point out as well is that the Rivian position that we had played out beautifully. We saw this little bit of a rally actually coming into earnings. Luckily, did a lot of selling on Friday and then actually came in short around 18. It ended up going to 19. I got even shorter, and then we got this nice sell-off. I was able to collect some more profits back on that. Didn't really play Rivian much on the day. Instead, played Netflix, and I'm still short on Netflix. We have a 305 target here on Netflix. A very nice short position. It just bled all day. It's one of those positions where you just keep playing into it because it keeps going in your favor. And so I love those types of plays. My pair with Netflix that I have set up right here is going to be Intel, because we're talking about all that strength, that trend that seems to be playing out in the semiconductors. And if we also look at a lot of the volume that's been coming in on Netflix today, I'm really liking seeing all this buying here, especially when you look on a longer time frame. We can see this is a pretty significant, what looks to be like a double bottom right here. We keep getting support coming in on this value. We saw some great news on this company. We saw that they ended their dividends, but instead they're going for big growth. They're working on that domestic production. They also took a 5% position in another production company that's going to help them build that manufacturing. And I am super pumped about what the future could hold for Intel. We also saw some reports that they are trying to make sure that they're going to be a leader in quantum computing. So they're really starting to stretch out their time frame, readjust themselves as a growth company, and I'm super pumped about it. And I think a lot of value could come back to this company, especially as money tries to escape some of these growth names and start to say, okay, what's undervalued? But you know what doesn't look undervalued to me right now? That's Bitcoin. And before you get all mad at me, let me remind you that I put out tons of content near the lows here about all the YouTubers that were selling, about the big arrest, all these signals that usually come in around the bottom. I was like, this looks like a great time to buy. I did my buying, and we have really good profits right now. And so I'm taking some of those off and I'm building some cash. And this is not just something that I'm doing with crypto. I'm doing this with my account in general, building up cash right now. And I've been talking about this for a while, but due to the fact that we've seen most of the market movement actually in the after hours. And although it's been choppy during the day, great for scalp traders, but overall, very stagnant, right? It's the signal of uncertainty to me. Even though VIX isn't moving, I'm getting worried because my gut just keeps telling me like, this doesn't look good. And the big sell-off today confirms that for me, even if I wasn't optionally positioned for it. So I'm right now keeping like 60 to 70% cash coming in the end of the day in my account. And what that means is I cut losers that are shorter dated. If they're losing, I cut them at the close. I'll look at them again tomorrow. The next day. For winners, I'm making sure I de-risk there. I take some profits. Profits are great, especially in a market that's really difficult like this one is for like the past week. And so I'm going to keep doing that until we get some more major signals and some more major trends that are developing. Now, I picked out some companies that I like right now, but overall, I am keeping heavy cash right now so that I can stay reactive as a trader. I think that's really important. But even in my investment account, when it comes to Bitcoin or some of my long-term holdings, I'm doing the same thing. And sometimes this leads to selling out too early. Like I sold out on NVIDIA too early. But in the end, by the time the end of the year comes around, this usually leads me to have significant performance over the S&P. So this is what I like to do for my risk management. Remember, none of this is advice. It's all for educational purposes or entertainment purposes. Maybe you find me entertaining. I think most people find this boring, but hey, whatever. I'll see you in the next video.